Everybody seems to want to know, are we there yet when it comes to a recession or a market's bottom or when the markets are going to recover? This is Tyson Ray, financial advisor at Form Wealth Advisors, where we exist to help make life better for our clients and those in our community. After we've digested all that turkey and ham and enjoyed the fellowship of friends, we also get to celebrate the market is up for the month of November. Coming off of the October lows with the inflation data being positive, the market's rallied quite a bit and held those gains through the month of November. Why is the market doing what it's doing? It's because everyone's talking about recessions. And has the market put in its bottom? Is it going to get worse? And what I want to tell people is when it comes to investing, by the time everyone is talking about a recession, it's often too late to do anything with your investments because your investments are pricing in already everything you're talking about, because that's how these investments work. And so what I try and do is have some perspective around, okay, if the markets are already pricing in what a recession is going to look like, what have markets done in the past when we were talking about recessions and actually going through them? Hence, let's answer the question, are we there yet? First things, as far as recessions go, let's look at these past recessions. First of all, the average for the last, going back to World War II, of all 12, and this may be the 13th recession, which isn't a lot to go off of, quite frankly, but that's all we have. The average downswing of the market, if there actually is a recession, and it hasn't been declared yet, is about 29, call it 30%. Now, I want to talk about, because what people are worried about is how bad some of these other ones have been. If something else breaks, I think that may be the only reason why we would have any other down leg in the markets. And so where people are worried about getting out, it's too late to get out. And if you want to get out, it's only because you're hoping there's something else to break, that you get another down leg to get back in at some better price. And I would just caution you against that. And the reason being is if we go back and look at the worst one, which is the financial crisis, you had the housing issue, and that was a down leg. But what else broke was a policy mistake by letting Lehman Brothers go under and the government creating a mark-to-market rule that actually took the market even lower for about 6 months. And when they repealed that rule, it recovered. Or if you go back and look at the tech bubble, which is the 2000, 2001, 2002 recession, the market had a second down leg coming out of the Y2K technology, IPO, all the technology focus. That was the first leg. The second leg was 9/11 and us going to war, and that fear caused, again, another leg down in the recession. I would say that the recession that we may be going into and that the market has already priced in is probably going to be much like these other recessions that were much more mild. They didn't last all that long, and it's too late. The market's already priced it in, and I think the market may be recovering now off of that. And so for those of you that have panicked out, you may want to really consider getting back in, or you may never see these levels again. For those of you that are worried, I would just encourage you not to do anything. For our clients that are retired, here's the deal. We only have so many units of investment shares in portfolios because we're no longer working and accumulating wealth by earning it. And so in this market cycle or this environment that we're in, it's got to hold on to those shares. I don't want to sell anything until we get to higher levels, which means we need to use the cash reserves that we have, the dividends and interest that get generated, and if need be, 2023, if this doesn't recover sooner than later, we may need to tighten our budgets a little bit, as we've done in the past, waiting out these other recessions, but to look for the opportunity to get out at better price levels. And so now is not the time to make any major changes to our portfolio or our strategies. And yet for our working class folks, those that are still earning, take advantage again of an opportunity to buy things 10, 20, 30% off in the portfolios by dollar cost averaging. Here before the end of the year, if you can make that additional contribution, catch up that adding to that 401k, maybe making that IRA or Roth contribution. Again, these are your opportunities where things have gone on sale, and these are the opportunities where wealth really can compound to get you prepared for your retirement. For those of you that aren't our clients, I want to reiterate that the value an advisor brings is not how well your portfolio does in the good times. It's keeping you in your portfolio in times like this. And I find a lot of advisors are panicking, worried about what they're doing with their clients' money, or have gotten their clients out of their investments. And that is the fatal mistake that you can't recover from. And so we have a process, we have a strategy, and we're happy to give you a second opinion as to why you should have your portfolio invested and ride these things out, then react to these things. As we go into this holiday season in December to wrap up this year, and as we look into the future, I want to remind you that of all 12 past recessions, we not only recovered, we thrived as an economy, as businesses produced products and services that people wanted and wanted to consume. And I don't think this rising of interest rates or this inflation issue is going to stop that phenomenon from continuing, because historically speaking, that is our guide. And I think we just need to, I think those that have some patience will be very rewarded either this Christmas or a Christmas into the future. So enjoy the holidays. I look forward to talking to you again. The purpose of these up or down videos is to try and bring a little understanding about what you should be doing with your long-term investments based on what is going on. And so this is Tyson Ray, financial advisor at Form Wealth Advisors, where we exist to help make life better for our clients and those in our community.